Happy Wednesday, everyone. Welcome back to another edition, another week of hashtag AskRobCo. We have James with us again this week. Hey, James, how you doing? All good?
Yeah, good, thanks, Rob. Very good.
Good. Put down in the background. Loads of people are away at the moment, so I appreciate you letting me know. The market doesn't stop for holidays. We definitely don't stop for holidays, so we just keep going. We're here to give you all of the evidence, all of the intel, all of the data. As you know, for all of the familiar faces, the right-hand side is the questions column. You write the questions, we are going to give you the answers. It's been another extremely busy week. It's just so interesting that we've had this lockdown period, we've come out of it, it's been crazy busy, and then the crazy busy is just carrying on with volume of work, pent-up demand, new demand, and a really buoyant, active market. At the same time, there's obviously lots of new economic data that's filtering in day by day, some positive, some not so positive. I think officially today it has been announced that we are in a recession. At the same time, I think the June figures, the rebound figures were pretty good, and July have continued in that way. I was out valuing and inspecting this morning. I was in two areas. I was in Kensington and in Belsize. And what I noticed that a lot of people are starting to be out in restaurants and cafes, outside dining on terraces. Yes, we've got the stimulus from the government that Monday, Tuesday, Wednesday, 50% off everything. And that's really working. In London, in the village stroke outdoor areas, it's really working. So Kensington High Street, everything that had exterior dining was full this morning, same as Belsize, and the evenings as well, along with the Monday, Tuesday, Wednesday policy. And I was in Belgravia yesterday, I was in Fitzrovia yesterday, and those areas as well, Fitzrovia, Charlotte Street, put in an application for on the road exterior dining until the end of September to close off the road, because you've got loads of restaurants down there. Belsize Village have done the same. Hampstead Heath are looking to do something similar. So what governments and councils are doing at the moment is looking how we can get people dining, eating, drinking outside. Tottenham Court Road full yesterday of people eating outside the restaurants, a lot of the chains. So I know you're reading a lot of doom and gloom and a lot of negativity, but the stimulus that the government have brought in with the 50% Monday to Wednesday, and councils giving extensions and permissions for street dining, streeteries, France, Spain style, that's having a real impact. So for those of you that are not in the heart of London, or you're not in the villages within London, maybe zone 2, zone 3, just so that you know what's happening on the ground, I'm just sharing with you, there is a lot of activity, even in places like Mill Hill, Totteridge, that extends to zone 3, 4, and 5 that I'd call suburbs. These places with exterior dining are full in the evenings, and there's some real positive activity happening there. So any comments on that, any places that you're seeing, whether you're in Parsons Green, whether you're in Wimbledon, whether you're in Oxshott, Cobham, any of the Surrey areas, or if you're seeing that trend, share a message or ask a question. I'm literally on the ground every day out inspecting, and we're just seeing some good activity. Anything on that, James?
Yeah, I was going to jump in straight with the some sort of data and just a catch-up overview of the situation with the economy, which obviously today has been the release of data from the government. So I'm sure everyone's aware, but the UK economy has obviously shrunk by over 22% in Q2, leading to sort of the second quarter of negative growth, and it's officially the UK moving into recession, and I believe it's the largest recession on record. However, sort of with lockdown, I think this was quite an inevitable situation which we find ourselves in. Just to sort of note, Spain has been slightly worse affected than the UK, seeing a 22.7 fall in GDP, whilst the USA has been slightly more resilient, seeing a 10.6% fall in their Q2 figures. Like we mentioned, due to the extended lockdown measures we saw here in the UK, particularly in April, as those sort of stringent measures tightened, and the furlough scheme, it was sort of inevitable news from the financial forecasters, which they predicted a severe sort of negative GDP fall. But are we starting to get on the road to recovery, with the construction industry really leading the way there?
Yeah, I think that leads us perfectly onto looking at this week's data, just so we can see what the sales numbers are, how the market has moved in the last week, and obviously property / construction related. So if you look down at 20 week post-lockdown numbers, that's handout number 5 on the right-hand side. These are the numbers we go through with every week, and the numbers are really positive here. If you look at column 3rd of August, week 31, 2020, the first column we always go through is the new instructions. We want to see what's being fed into the market. And again, with 651 in the last week, I believe that's the second highest figure or third highest figure this year, which makes it one of the top 10 in the last 4 or 5 years. So tremendous volume coming on stream. The under offers are a good number, 394, hovering around the 400 figure, which is where we were pre-lockdown, which means there's a lot of offers happening, really good activity, because remember, pre-lockdown we were strong. And then the column that really makes a difference, especially from a valuation perspective, a lending perspective, and ultimately the sustainability of a positive free-flowing housing market, is the sales figures. And 174 this week on the back of the 194 last week. The 194 was the, I think, second or third highest week in years, or maybe in the last 4 or 5 years of doing these numbers. And 174 is a very strong number, and I believe that's the third highest of this year. So we're on some really good sold figures. This is live intel, it's happening, it's on the ground, it's being filtered through to you on a daily basis. The numbers are good, and as I keep saying, we need to see those numbers carrying on for the next 3, 4, 6, 8 weeks to prove that this is not just pent-up demand, this is a buoyant market with the government stimulus, stamp duty coming into play to keep the market moving on. Now, if we move to the right-hand side, we've got the latest monthly numbers on our 2 million, 3 million, 5 million, 10 million, for all of you prime, super primers out there. And the numbers are tremendously positive, 2 million plus, so record month of the year. And the same 3 million strong numbers. And I think both 5 million, 10 million are strong. And again, we need to see continuation of that for the rest of the year. What we don't know is how many of those numbers were the pent-up demand and the bottleneck and the backlog coming through. And what I want to see is when we give you those numbers in a month, that they're just as strong, just as solid. And really, what I'm seeing at the moment, if I'm going to make a guesstimate, estimate, an intuitive prediction, I think the numbers are going to remain. Why? We are tremendously busy at the moment doing valuations. And if you have a look at handout number 4, the latest mortgage applications, this is 1 month, what I would say 1 month behind. There's like a 1 month lag. but the June rebound was already strong. So we'd already gone from rock bottom, 08, 09 numbers, rock bottom in applications. And then suddenly we're at 50% already with both new mortgage applications for purchases, which is the red or the pink line, and the remortgage refinance black line recovered reasonably quickly, nearly halfway there. When we get these figures for the month of July, I'm pretty confident we're going to be very close or closing in on the pre-lockdown levels. Mortgage applications at the moment, so this is approved, but mortgage applications that are going through at the moment are a record high with some lenders. So a huge volume there. If those applications get approved for purchases and refinance, then in the sales figures and these numbers that we're seeing here, activity should be returning extremely quickly to pre-lockdown levels. And if anything, they might supersede pre-lockdown levels because of the buoyancy and the activity we're seeing at the moment. So everything that I'm giving you with the daily data, okay, where we're at is being supported by what I would say is the lag data. And if we're pulling in the lag data to the current data, we're going to be at very strong numbers in terms of volume of sales transactions, volume of mortgage applications that are approved or going through, and a buoyant housing market in the short term. James, what do you want to add on that?
Well, just as we're talking about the super prime sector, I wanted to just bring you news of a property which has been launched to the market, just possibly underlining some resilience in that super prime sector. Seen the launch of the 1 to 18 York Terrace East for a guide price of 185 million. And just to give sort of listeners a bit of background to that property, it's a grade 1 listed John Nash Terrace, and in terms of rarity, it's the whole terrace, which is unheard of, really, to be offered to the market, and one of the last surviving terraces that you could acquire as a whole. In terms of the history of the building, I think from 1967 onwards it was used as student accommodation, and prior to that it was government offices. It closed around 2014, 2015, I believe, and was acquired by the current owner in 2016. Since then, the development plans have been sort of underway with their permission for, I believe it's 26 flats and 2 houses, but with the property being offered for sale, it does offer the opportunity to be acquired as a single residence for those sort of high net worth individuals, which it could draw interest from. I mean, we have reported other super prime sales in Regent's Park in the last 3 months, most notably Christian Candy reportedly sold his Regent's Park mansion for £104 million, sort of super prime sale there. And these just really sort of underline some of Rob's data, which he's sort of bringing you the sort of latest updates on.
Yeah, I mean, listen, just so that the audience really understands what kind of value and content we're trying to bring you here on a weekly basis. We are so live, and as one of the leading independent valuers in the marketplace, the more volume we see is an absolute perfect reflection of where the marketplace is as of today at this moment in time. So we are tremendously busy. Okay, so maybe a month ago we would have been tremendously busy because there was this huge backlog. Now maybe we're at the tail end of the backlog now. What we're seeing is purchases and new acquisitions on the back of what we've seen over the last 3 or 4 weeks is a tremendous amount of stock coming on stream. That stock is converting into under offers, like our Lundres expert explained the other week, and now it's converting into sales, and we are doing the valuations for those sales, and they're happening across the marketplace. Huge volume across 90% of the country at the 500,000 below, brought on by the stimulus for the stamp duty. The knock-on effect to 1 million, 2 million, 5 million, 10 million, the whole market sees that chain reaction as the property food chain kicks into play. Something quite interesting that's been raised in one of the questions is the the fall through column, and the number that reflects, and the withdrawn numbers as well. I think that data is important data. The more properties that come onto the market, the higher level of properties being withdrawn, because there's a perfect alignment there. So I think that makes sense. Also, there are people that put in cheeky properties at really high figures that probably don't get much traction. So they put them on, see if there are any bites, and take them off. So I think it's a good point that you've raised about looking at the fall through rate and the withdrawn rate. At the same time, it's the more properties that come on the market, then there's a higher number of withdrawn for that reason. So I think they're perfectly tangible. Another point that's been raised are SW11, streetery, alfresco dining, everywhere's rammed, everywhere's full. Monday to Wednesday taking advantage of the government offer, 50%. The rest of the Thursday, Friday, Saturday weekend trade. This is a trend, and with the good weather, with the non-traveling to Spain, the biggest market for UK travelers and tourist destination, followed by France, that possibly could have quarantine restrictions brought in play within the next seven days. Suddenly, it's UK, alfresco, good weather, and we've probably seen the best run of weather probably since the year I was born in the 70s, not to give away my exact age. And that's all playing into what the government wants to create, having stimulus at a local, national level across the UK, whereas they want all the money to remain within the country, and that is being pushed into eating out to get over the psychological damage created by lockdown. James.
Yeah, so I just wanted to sort of move on from that. I mean, since the introduction of the stamp duty holiday, which is still providing some stimulus in the market, I think that this was brought in at the start of July, so we still barely seen a month of this. So there really is no official data to draw on yet. But sort of anecdotally, Rob, can you talk about how this is impacting the market, sort of 1 month on?
Yeah, for me, the evidence from lenders. So we deal very closely with, let's say, the top 5 to 6 lenders who are doing factory volume across the country, and we deal with the main lenders that are doing the non-mainstream lending. So your alternative challenger bank stroke bridging lenders, and we deal with the top 5 or 6 private banks in the prime, super prime space. So we get that triangle of information. We feed into those, as well as panel managers that have the distribution of 80%, 90% of all the valuation work. And the message is very clear. Mortgage applications are flooding in for both purchases and renewals, in line with the graphic that I've just shown. And that graphic, I believe, will double in the next period, because there's a lag in that graphic. And all that is on the back of the stimulus from the government for stamp duty, of the record low interest rates and products that are being created by the banks, and the fact that people either want to buy or want to refinance now for various reasons. Both they want to get in before possibly they don't have jobs, or they don't get as well paid before there changes. They want to take advantage and maximize their opportunity to borrow. And the market is very buoyant at the moment. Activity levels are tremendously strong. We're seeing this within the data. I'm repeating myself, but I just want to get the message really clear to everyone. Our data is live and not lagged. So this is day by day by day. If we're having a tremendously busy week this week, or first week in August, that's because the market is busy. As simple as that. There's no other there's no other reason or rationale behind that, apart from that we are a perfect reflection of where the market is now, not a 2-3 month land registry or Bank of England data that always lags. We're live, we're here, we're present, and that's why the platform and the data and the weekly updates we're giving you is so important, because you get the value of that content of what we are seeing. So wherever you're positioned, in Singapore, Hong Kong, Zurich, Geneva, Guernsey, Jersey, Isle of Man, Gibraltar, throughout Europe, wherever you are in the UK, you're just getting a live stream of data and intel and information that is a pure reflection of what we're seeing as market leaders or independent leaders in the valuation space, to allow you to get a real context or comprehension of what is happening. What else have you got, James?
Yeah, I mean, just to follow on from your point there, Rob, it's obviously going to create a spike in those purchases below 500,000. But I think what's going to be interesting is how our data, which we bring you, will impact those purchases for, say, the 500 to 750 or the 500 to a million bracket. Just how price sensitive those buyers are, and savings brought about by the stamp duty holiday. So that's something that we'll be obviously watching out for in the coming weeks and months in the data we're bringing.
Yeah, I mean, absolutely. It's fundamental. It's as I keep on saying, it's the food chain in the property market, the distribution of money, wealth, and funds, the knock-on effect, bottom up, top down. But when you've got the 90% volume below the 500,000, and they trade up 500,000 to a million market, has a huge impact. There's no surprise on our data that the 2 million marketplace has seen the best transactional volume this year. That's because it's all coming up from the bottom, and it's feeding through to allow people to upsize where they want to upsize. And that is being seen in the volume of transactions that's happening. And so it's having an impact, James. At the same time, we need to follow the data, follow the intel, follow the trends, week by week by week by week by week, share it with you so you have an absolute understanding of what's happening live in the marketplace, so you can make lending decisions, policy decisions, pricing decisions, risk decisions, LTV decisions, contingency planning, affordability, etc., 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 all on the back of the information we're sharing with you. Last question or two, James, before we close up for another week.
Well, I think we've had a question in regarding sort of the buy-to-let markets. Just in terms of a brief overview for that, I think in the last few weeks I've been bringing the listeners data regarding some of the new mortgage and buy-to-let products which have been brought to the market, and these continue to be new products being launched week on week, with LTVs raising slightly. I know the mortgage lender has increased their LTV from 65% to 75% just this week for new and existing loans. So again, a positive indication there. I don't have any specific data on sort of those exact buy-to-let statistics, as they're very much blended in with other transactions, but I think it's positive news, some of the new lending products which are coming to the market and being launched.
Absolutely, absolutely. I keep on repeating this one. The buy-to-let market is changing. It's not so vanilla mainstream. It's a bit more specialist now. HMO is flying. That marketplace, that product, it's logical, it makes sense. It's really, we're seeing a lot of business there. Anyone doing that product should be very much aware of it. And all in all, transactions and deal flows are just positive. And I just think that it's great that we're in August. So many people are away at the moment, which is, I was just having a conversation yesterday with one of the panel managers, and they're like, it's an interesting one, August, everyone going on holiday, especially in a year where most people have been on lockdown. or have been, possibly been furloughed, and suddenly you hit August and loads of people are away. I don't know if any of you are facing that challenge at work, but the banks and the lenders that we're working with are saying, Rob, we're down on staff. We've got this huge amount of applications to deal with, and we just don't have the staff and the numbers to deal with it. And I find that fascinating. It's we could do a whole show on the volume of work that's coming through to the lending and the banking financial markets through mortgage and purchase applications in August 2020. And at the same time, everyone I'm speaking to is understaffed and can't manage the amount of volume. So I just find that fascinating, absolutely fascinating. All right, everyone, thank you for joining this week. Hashtag AskRobCo. Every edition now is on YouTube. We share the link with you. If you want it, get it off me. If you couldn't get all of the data or all of the handouts, contact us. If you didn't get your question answered this week, I'm sorry. Write to me, message me, DM me, and we'll get it done. We're sharing all the intel across all platforms with all of your colleagues, with all of the banks, all of the lenders, sales, risk, credit, sanction, anything you want us to discuss. We will be having some special guests, probably first week in September now when the holidays are over. We will be bringing in more people, as previously from banks and from lenders, to give you the best data, content and value possible. Thank you for joining. Thanks, James. Thanks, Dan, for sorting everything. And we will see you same time, same place next week. Enjoy the sun, enjoy the good weather, and enjoy that alfresco dining. Take care, everyone.
Thanks, everyone. Bye-bye.